Good afternoon, everyone. Glad to be here again and to be moderating this panel for the third time in a row. Glad to see Josh and Matthew again, and for the first time, Slavik. For those that don't know me, I'm Andreas Pericleous. I handle the ACMI deals for ACC in Africa and the Middle East. Josh, if you'd like to give us a few words about your work.
I'm Josh Romanow. A pleasure to be back after so many years. This is a conference always near and close to my heart. I'm a corporate and regulatory lawyer in the U.S., specializing in aircraft licensing, aircraft wet leasing, ACMI, traffic rights, anything involving North America. And my good colleague Matt here, who is always in more demand than I am these days.
Yeah. Hi, everyone. So, I'm Matt Rabinowitz. Nice to be with you all. I think this is my third time speaking at this event. So, yes, nice to be outside the confines of Gatwick Airport. But, so I specialize in export control, sanctions, international trade. So I work with all parties in the aviation life cycle, so manufacturers, MROs, lessors, lessees, on all aspects of trade compliance when it comes to aviation. So, look forward to meeting you all and chatting about legal hot topics.
Hello, everyone. I'm Slavik Schiopu, VP Leasing at ACC Aviation. I've been with ACC 9 years, and now I find myself on the stage. I've known most of you through, working relationships, so it's good to see everyone here. And I'll be discussing the navigation of wet leasing and intricacies of wet leasing worldwide.
So for this year, we've sort of changed the subject a bit. We have decided to sort of talk about navigating the ACMI on a global scale. Obviously, Josh is specialized in the US market, and we'd like to hear your thoughts on how the airlines across this room can enter the US market in terms of approvals, DOT, FAA, and everything like that.
Certainly. Somebody once asked me recently, with the U.S. government shut down, does that mean we can just show up in the U.S. and land anywhere we want and go anywhere we want? And I said, sure, if you'd like a one-way ticket to Guantanamo, you can do that. But all kidding aside, although there is a U.S. government shutdown, the agencies charged with safety, regulating airlines, the TSA, the DOT, U.S. Customs are still operating, they're still active. We are still working with them at a very high and active level to get licensing done, to approve wet leases, to approve traffic rights, even at a time where there's a diminished staff at a lot of these agencies. And to their credit, a lot of these inspectors are working without pay. And so it's a very difficult time, and I give them a lot of credit for hanging in there with this industry, but I think everybody in the US and in the transatlantic market and in the wet lease and ACMI market realize that aviation must continue, even in a government shutdown. And so there has been at least enough attention and funding directed to allow these key agencies, these safety agencies and these regulatory agencies to remain intact. So for the US market, and also I can touch on Canada as well too, the licensing process has been very, very active. And I'm pleased to say that many of the delegates here in this room I've worked with, and I've helped with US licensing over the years, and attended many inaugural flights, and it's just something that's close to my heart, warms my heart every time I see it. But it's nice to see the US market, even in these unusual times, continue to be a beacon for aviation, for wet leasing, for ACMI. The one nuance I think that we've started to see, and there may be a couple of US carriers in the market in the room here. I see Sean, yeah, there he is there's been a little bit closer attention on making sure that the US carriers have the same access that carriers that are applying for the US traffic rights get as well too. And so you've seen some recent action by DOT on the Mexican carriers because the US carriers have not had significant, they've had some issues at Mexico City Airport. And you've seen also with the Chinese, with the Russia overflights by the Chinese carriers recently. So you're starting to see some new actions taken by the new administration just to make sure that the US carriers get the same access and the same opportunities as carriers that are not US, that are seeking to either enter the market or expand in the US market. All that being said, the licensing time for a wet lease really hasn't changed very much. It may take a little bit longer. As I think I've said before many times, you can't just do a wet lease and get it approved. You have to have the underlying traffic rights. You have to have the basic Part 129 license, DOT Economic Authority, and a transportation security program. And the same goes for Canada. You can't reach the US market without overflying Canada for a lot of routes. You need to also be licensed, to have the appropriate licensing for Canada as well too. And the same for southbound flights that are overflying the US to Canada. You need the licensing in the US or US overflights, even if your aircraft is not landing in the US. So what many airlines have done, and we've been very fortunate to have worked with many of these airlines, is get your licensing, get your programs done in the US, have everything in place. You have lots of different opportunities and can take advantage of business opportunities as they come in, rather than getting an opportunity on your plate and suddenly you don't have the licenses yet. And so we continue to see a steady stream of US licensing. And for those of you who are not licensed in the US or are thinking about it, happy to speak with you after or on the sidelines of this conference, or have your licenses but are considering wet lease opportunities. There is an extra level of approvals for certain kinds of ACMI and wet leasing in the US market, which also requires advance approval. So I also do many of you are on it, sort of a weekly update on what's going on in the ACMI and wet leasing market. So if you're not on my mailing list, on my distribution list, come see me afterwards. I'm happy to add you to my list.
So just following up on the presentation from Dave, where it says the US market is quite a significant one. Mm-hmm. Is there any room for European ACMI operators entering into the market?
Absolutely, and we've started to see ACMI carriers outside of Europe proper as well too, getting licensed, looking for opportunities for third country, seventh freedom, wet leasing in the US market. So even though you may have aircraft that are not transatlantic type of aircraft, but they're short haul aircraft that can be counter-seasonal aircraft for wet leasing in the winter or ACMI in the winter, US Canada, US Caribbean, US Mexico, things like that. There's certainly opportunities, and we've seen a long list of clients and airlines who are looking to enter the US market, take advantage of these opportunities. The one thing I might say is that the more you are in the US market, the more opportunities or the less scrutiny you will have. We've recently seen some cases where long-haul carriers have sought to do third country, seventh freedom wet leasing from the US to another country, and there have been objections by US carriers. And there have actually been carriers that have not succeeded with these applications, and other carriers have been successful because they are constantly in the US market flying US, Europe, and having lots of third and fourth freedom flights. And so there's a lot of tension in that space, but it's something that's not insurmountable, but it's gaining more attention from the US carriers. And I think the US carriers rightly think that we should have the same opportunities in other countries that non-US carriers have in our markets. And so there's a balance there. And so for that reason, there's still great opportunities for short haul, long haul, wet leasing, third country wet leasing in the US market. And I would just suggest if you're looking at this winter, it's already getting kind of late. And if you're looking at next summer, you should start now.
Okay. Matthew, we did just mention some of the policies the US administration is is working on. What would be the key takeaways from the current Trump administration impacting the aircraft wet leasing?
Yeah, no, that's a good question. So, I mean, I think under this administration, we've certainly seen some new developments that impact the aviation sector. I'll just note, just to Josh's point on the shutdown, it is still ongoing. There is no real set time for this to be resolved. It's quite politicized and expected to drag on at least for a few more weeks, into the holiday season. But like Josh's agencies as well, OFAC, BIS, these are sort of regulators in charge of export controls and sanctions. They are operating. They have national security functions. So the agencies are operating, but with reduced staff. And so things at the more administrative level are taking longer. So when it comes to licenses or sort of engagement with the government on the day-to-day things, they're not moving as quickly, if at all. Whereas bigger picture, AOGs, right, those types of situations, there's still the ability to engage with the government. But for the day-to-day compliance matters, it's the lawyers saying don't blame the lawyers, but the lawyers are, attempting to work with the government. But it's a very challenging climate, both for the people and for businesses to really interact with the government, given the shutdown. That aside, right, this administration, President Trump is highly focused on tariffs, right? That is sort of his economic bargaining chip of the administration. And those are, frankly, I mean, they're subject to legal challenge, right? The Supreme Court will be hearing soon legal challenges to certain tariffs, the IEEPA-based tariffs, the reciprocal tariffs. However, the administration has said they're going to use tariffs in one way, shape, or form. So there are, and I won't bore folks on this legal panel about all the different statutes that exist that allow for tariffs, but there are multiple statutory authorities that can be used that can impose tariffs in different ways. So we expect this to be a continued negotiation tactic, economic measure, and at this point it's too early to say what the outcome will look like, but obviously something we're monitoring very closely. I think from an export controls and sanctions standpoint, that can be its own hour-long conversation. Like to try to go sort of around the world in 2 minutes, just to sort of give a brief update on where we've been in the last 10 months or so. With respect to Syria, that's an area where the U.S. has lifted its comprehensive economic embargo, but importantly, export control restrictions still remain. And so that matters quite significantly when it comes to aircraft flying in and out of the country, as well as parts and service and support. And so again, without going too deep into the weeds, U.S. applies their export control laws extraterritorially. So it's not just things coming from the United States. It's not just aircraft made in the U.S. It can be non-U.S. made aircraft that incorporate more than de minimis U.S. content. So very often we see situations involving carriers outside the U.S. looking to fly into places like Syria, like Iran, like Cuba, using non-U.S. made aircraft, but the engines are U.S. origin. That, generally speaking, is going to make the aircraft subject to U.S. law and need to be compliant. So with respect to Syria, even though the embargo is lifted, there's export controls if the aircraft is subject to U.S. law. Now, importantly, there remains a key exception called AVS. And that, some of you in the room may be familiar with it, that's a temporary sojourn exception that allows for aircraft to fly in and out of an embargoed country under this exemption. So typically it needs to be out of the country within 7 days. You can't base the aircraft in that country, and you can't lease or charter to a national of that country. So under this authority or this exception, many airlines are operating in and out of Syria, Cuba, Iran on a temporary sojourn with the sort of caveat that you have to make sure your insurance is covered. You have to be wary of AOG situations where you only might need licenses to get parts or technology in the country to repair the aircraft, and all the other logistical and compliance challenges that come along with operating in an embargoed region. Real quickly, I'll note with respect to China, because that's another sort of big topic right now. The U.S. has, from the aviation standpoint, there aren't necessarily any new restrictions, but there's one important rule that's very relevant, which is called the affiliates rule. So again, without getting into too much detail, the U.S. government has various restricted party lists, and they can vary. There's sort of the bad guy SDN list, that's an OFAC list of terrorists, drug traffickers, government officials involved in human rights abuses. other sanctioned parties. The Russian oligarchs, they're all SDNs, and so you can't deal with those parties. OFAC has adopted a 50% rule. This has been around for many years. So what that means, if you're sanctioned, anything you own 50% or more of is also treated as sanctioned, even though it's not on any type of list. And so what the affiliates rule did is it applies that same rule to export control lists, so like the entity list or the military end user list. And so there are different airlines and aviation suppliers on these restricted party lists, and this rule, a lot of parties in China as well, this rule would apply those restrictions to their subsidiaries, where they wouldn't have otherwise been subject to those requirements. As part of the recently negotiated US-China Trade Pact, the US has agreed to waive this rule for 1 year. And actually this week we should see the formal announcement of that. It came out in a White House press release and sort of reports circulating after the meeting with President Trump. And so it's an important rule and really emphasizes the need for due diligence, right? Because it's not just looking at who are your counterparties, but what's their ownership look like? And running the screening and making sure you're not dealing with any restricted party, not just at an individual level, but based on ownership. So, and then last note I'll make on Russia. So, obviously that's still ongoing as well. Strict sanctions remain in place, as do export controls. You may have seen recently the OFAC designations of Lukoil and Rosneft, two major Russian energy companies. We've seen in the aviation context fuel, right? That's a huge issue because Lukoil has certain subsidiaries that are fuel suppliers in different parts of Europe, and we're working with a number of clients to navigate those challenges of how do you make payments now that you have a sanctioned fuel supplier. And so I'm happy to discuss that separately about how that might work. But these are some of the challenges that we're facing, and we expect to continue to see the evolution of sanctions and export controls and tariffs really as economic leverage as we work towards different trade deals with countries like China, like Russia.
Thank you for walking us through the sanctions and the tariffs, but how can actually the lessors and the lessees address this constantly changing requirements? What do they need to do?
Yeah, so that is sort of the tack on is, well, what do we do, right, as where we sit today? Part of it is negotiating very flexible language in your lease agreements and other arrangements, right? So all the time we see situations where we have a company that says we want to operate in Syria or in Cuba, but our lease doesn't allow it. Like, how do we deal with that, right? And so part of the time, it's really making sure you're really carefully looking at your lease language and your insurance language and your financing language that allows for operations in what might be called a prohibited country or a restricted country if it complies with applicable laws. Because very often we'll see, well, the lease says it's a restricted country, we can't fly there no matter what, even though the law says we can. And I can appreciate that's often a very frustrating situation. And some lessors, as a policy matter, don't want their aircraft in any of these countries, right, as a matter of compliance, policy, or risk tolerance, or the like. But as a lessee, you'll likely see pushback and saying we should be able to operate wherever we lawfully can operate. And so that's part of the question is, looking at the flexibility in your contracts that allow for different activities, checking with your insurers, checking with your banks to make sure they're going to process transactions if there's money that's derived from a sanctioned country, because we often see many banks are de-risking and just electing not to process transactions where there's a problematic country that's hooked in. So I think it's really, before you get too far deep down the road, investigating and analyzing a particular proposed operation to make sure it's compliant, and that from a logistical standpoint, all the parties are aligned that the activity can move forward.
Perfect. Are there any areas where they need to pay particular attention to, or it's just in general there is this notion of where?
Yeah, well, it's due diligence and it's sort of legal analysis, right? So, I mean, I'm sort of spewing off a lot of different legal concepts and screening obligations and ownership reviews. That all should really be done up front. So, some practical examples. If you have someone looking to charter a plane and they are a broker or an intermediary, you have to ask, well, who are you brokering for, right? Who is your end user? So when we deal a lot with charter arrangements, it's not just, and there's actually an enforcement case from last year with a company called Sapphire, a Turkish charter broker that brokered a plane for a Russian national that flew in and out of Russia. So as I mentioned, there's an exception called AVS that allows for aircraft to go in and out of Russia. But that exception doesn't apply for aircraft that are owned by, controlled by, leased by, or chartered by a Russian national. So that's a due diligence challenge, right? If you're going to an intermediary, you need to ask the question of, well, who is your ultimate beneficiary? Who's actually has control over the aircraft? Who's chartering the plane? Particularly if it's flying into a sanctioned country. There's now a common expectation that parties use screening tools, right? So there are a lot of different lists, they're expanding, there's thousands of people on it, and with the 50% rule, it expands to tens of thousands of restricted parties globally. There are dozens of software vendors in the market that have automated tools so you don't have to manually go and search these lists. So think about, from a compliance standpoint, should we invest in software, AI, technology, to help us automate the process so that we're catching issues, particularly where we're going to have challenges getting the information from parties, down the chain. So it's these types, and then it's sort of the legal analysis of, well, my potential lessee is approaching us with a fact pattern. Is it legal, right? Like consulting with your experts, consulting with your counsel, asking your lessee to demonstrate why it's legally permissible. So we often see on both sides, right, legal opinions coming from different law firms that walk through the analysis, explain the pitfalls, explain the compliance challenges, and that gets the parties comfortable that the operation can continue. So it really is this sort of not just looking at the business opportunity, but looking at the legal ramifications to make sure everyone's comfortable going ahead.
Slavik, just moving on into a different sort of subject. Over the recent years, we've seen many airlines opening up new AOCs in different locations around Europe. Why do you think that is the case?
Yeah, interesting question. I think the reasons for the opening up of multiple AOCs vary, really, depending on the airline opening that AOC. We see, obviously, the rise of Aviation Solutions Group with an abundance of AOCs being opened up at the same time as an investment, as a long-term play. The Malta AOC has historically been an AOC which kind of give entrance to the US market with Part 1 to 9. But recently, you hear from airlines that they want to go to Malta because it's, they can get a quicker answer from the CAA. Perhaps they're a bit more flexible, or it could be a hedge. Why have all your planes in one AOC in Europe when you can have two? It gives you a bit more flexibility if something were to go wrong in your main jurisdiction. So yeah, reasons are really vary from airline to airline. And I think everybody is doing it for their own personal reasons. It's not one factor that affects them all.
Yeah. Does it really depend where your AOC is coming from in Europe? Because, there are 27 different states in the European Union, but not all of them are Category 1. So obviously, if you come from Slovakia, from Cyprus, where they're not Category 1, you won't be able to fly to the US, right?
That is correct. And even though there is an EU-US Open Skies Agreement, several countries in the EU that are full member states cannot operate with their own aircraft because they're not Category 1. Hungary is one. Mm-hmm. Slovakia, I'm sorry to say, is one. Estonia is still. But recently, Lithuania has moved to Category 1, and there's been a lot of licensing in the US by a lot of the Lithuanian wet lease carriers. Latvia as well, too. The Latvians are now Category 1. So there has been some movement. The key is obviously to have, it's not an airline issue as much as a government-to-government issue. So when the FAA inspects and does an audit, they look at the civil aviation regime for the country. What does the safety profile look like? How are the regulations? How is it being enforced? How is the licensing going on? And so they look under the bonnet, so to speak, a little bit closer at what's going on in that country. And until a Category 1 is not reached, the carrier from that home country cannot operate there. And we've seen many examples of this where and this goes back a while, where Uzbekistan Airways was able to fly Tashkent, Riga, New York, but the carriers from Riga could not fly to New York because the Category 1 rating tracks the home CAA, not the airlines that are operating through there. And so it's just the unique quirk of the system. But yes, there are actually other countries that are still working their way towards Category 1. And we've seen recently the FAA downgrading some countries as well, too. And they work to get out of Category 2. We've seen it recently with Malaysia. We've seen it with Mexico. We've seen it with Israel. And they get out of it. They work, they clean up whatever issues have arose, and then you can come back from Category 2 and get back into Category 1 again. But it's to your point, and to the earlier point, a carrier from a Category 1 country, from an unranked or a Category 2 country in Europe with a Malta AOC, that Malta AOC can fly to the US. And so it has been an opportunity as well, too, for some of these countries to have subsidiary AOCs that can operate to the US.
Okay, so it's just a way to get into the US market via Malta, basically.
It tracks the home country AOC, yeah.
But how easy is it to get into Category 1? Or is it like a cumbersome process? Or
It takes a long time, and it took a long time with some of the Baltic countries. And usually once you're in Category 1, you stay in Category 1. It's a priority for the home governments. But occasionally there are issues. The FAA has recently published some more guidelines on it where you can be frozen at a level and you can't add aircraft or you can't do additional deals, wet lease deals, sort of as a warning. But usually there's an inspection, and then there's an announcement, and that's it. And so if you're already operating in the market, like say if you're a carrier that's already operating and you're in the US market, but you go from Category 1 to Category 2, you're frozen at the levels you're currently operating in. But if you're a new carrier seeking to enter the US market, you can't do it.
so basically you're saying when you're from Category 1 to Category 2, you can still operate in the US, but you can't really expand, yeah?
Only if you are already operating
in the market,
If you are not already, if you already have your Part 129 op specs and you already are operating in there, your operations are frozen at those levels.
Okay.
And you can't do anything else. So we've seen examples of marketing carriers that seek to enter the US market from countries that are not Category 1, and they of course do it via wet lease, via ACMI. I'm looking around, a lot of carriers in this room have done it with marketing carriers looking to get into the US market. Eventually, when the country becomes Category 1, the marketing carrier, then they can fly with their own metal. But in the meantime, it's a wet leasing opportunity.
It is a wet leasing opportunity, and that was the case with some of the airlines in Africa.
Absolutely.
Operating on a wet lease basis with airlines from Europe flying into the United States.
Yes.
Yeah.
Or when a country goes into Category 2, the same thing. It's a wet leasing opportunity.
Yeah, it is a wet leasing opportunity. Yeah, definitely. Obviously, we've seen some liberalization lately, opening up on the markets in Latin America. Slavik, do you think there is more room for expansion and more countries? Do you think they're going to be deregulating?
Yeah, absolutely. I mean, the trend is to go towards a liberalized aviation environment. It's slow, but every year you hear more regions take it on wet lease for the first time. Everybody knows about South America, Argentina, Mexico. We have new AOCs in Brazil with the aim to, grow the ACMI market, be it internally, be it to neighboring countries. We have the Central Asian region, Uzbekistan leading the way. And it's interesting because one day a certain region would be completely off limits. and then something will happen overnight, and it will change. The market becomes liberalized, sometimes without notice. The airlines then take on ACMI. I'm using Uzbekistan as an example, but all of its neighbors have expressed interest to ACMI. Kyrgyzstan, Azerbaijan is already doing it quite successfully. And the trend is to move towards, as I said, a more liberalized environment. It's slow, but it does happen sometimes without warning. So it's always important to kind of be in those regions, talk to the people, and stay ahead of the developments.
Do you think like creating AOCs in the regions will help them, like creating an AOC in the region of Kazakhstan, or like some of our friends here have created AOCs in Thailand or in Latin America?
I mean, that's the discussion of this year, isn't it? The AOCs being opened up by you know, I guess Aviation Solutions, and I'm sure everybody here will be discussing this topic later on, and there'll be many opinions on that. I have my own, whether they're right or wrong, I'm not sure. With regards to opening up subsidiaries, you know, it's obviously a long-term play, an investment, but at the same time, you know, it does carry risk. You know, if one subsidiary fails to perform, how does that affect the other subsidiary? So there's a lot of issues that we still haven't come across yet with opening up multiple AOCs. You know, this kind of AOC real estate is an interesting game, and it'll be interesting to see how it evolves.
I mean, you're definitely spreading a risk, though, having multiple AOCs and like being able to target certain parts of the world where you would have not been able to do so from Europe as effectively as you could possibly have done.
Perhaps
with
that is the
AOCs.
idea. I think that's the idea of the opening of these multiple AOCs. You know, to play devil's advocate, one could say that you know, you can have already established ACMI capacity in Europe, come to Asia, come to South America, and do it for a fraction of the price. You know, what if in those AOCs that have been opened up, in a year or two the costs rise and they become unsustainable, or the cost basis goes up? So I think this is uncharted territory. It's a long-term play, and we have to see the results.
Yeah. Josh, do you think if they were to open an AOC, like a European airline coming into the United States and opening an AOC, would that be feasible, or there's no legal, background to this?
You'd be surprised how many, you probably would, but a lot of people would be surprised how often I get this question. I'd like to start an AOC in the US. It sounds pretty easy to me. It is very, very difficult. There are strict ownership and control statutes that allow for only a very small non-US ownership. And the example that has been around for a while was the Virgin America case, where Virgins tried to start Virgin America. The U.S. carriers, the U.S. unions, all fought it tooth and nail. The fight lasted for years. Eventually, with some restructuring, they were able to be approved. But it is something that is watched very closely by the U.S. carriers, by the U.S. Stakeholders. And there is a very strict law. So, for example, if you're a fill in the blank, you're a UK carrier with EU ownership. There are pathways that the DOT and FAA, especially the DOT, can grant a citizenship waiver, given certain, if certain things are in place. For example, if it's in an open skies, from an open skies country, there's lots of different criteria for it. But the citizenship requirements to be a US carrier are not waivable. They're in the statute. The statute is very old, and it's not going anywhere, especially in this environment. And so, yes, you could find a structure, and we could certainly talk to you about it, about a minority ownership, a minority stake in a US carrier, but a non-US carrier coming in with effective control, with full control of a US carrier like they would do in Malta, or they would do in UK and EU. It's not going to happen, no matter how good your team is and no matter how good your lawyers are. It's a fight waiting to happen.
Yeah. Right. Thank you very much.
Thank you.